Welcome to the mini-series explaining the DR and IDR concepts and how you can use that in your trading every single day to get the best possible entry. We've got a lot of things to cover, so let's dive right into it. So what is the DR and IDR? The DR stands for the defining range and the IDR stands for the implied defining range. So if you're familiar with algorithmic trading, which most banks and financial institutions use nowadays, the DR and IDR is the closest representation of how the algorithm gathers all of the orders and executes them based on those price levels. And because computer algorithms tend to repeat themselves, once they've found a successful strategy, we can see the historical data on it. So when does the DR and IDR sessions print? There are 3 DR and IDR sessions. The Tokyo session range that prints between 7:30 p.m. and 8:30 p.m. New York time. The London session range that prints between 3 a.m. and 4 a.m. New York time. And the New York session range that prints between 9:30 a.m. and 10:30 a.m. All of these are going to be in New York time. To make it simpler, there are 3 main market sessions: Tokyo, London, and New York. This is the first hour of each session's open. So opening bell in New York, this time. So for 1 hour, this is the session range. So why is this range important? Based on 20 years of backtested data, when there is a breakout and candle closure on the 5-minute time frame between these levels of the DR levels, there is an 80% likelihood that price will not return to the opposite level. So if it breaks out on top, it is most likely going to continue in that direction. 80% of the time, there's only a 20% chance that it will go to the other end of the range. So as you can see right here, this is the Tokyo Open, the first hour of the Tokyo session. This is the first hour of the London session. And this is the first hour of the New York session. The indicator that I'm using to show this range is called Fractal Frenzy by TTF. These are the current settings that I have on here, allowing to show the DR and IDR ranges for each one of these sessions and extending it out all the way until it touches the next session. Okay, so the IDR range is going to be the range between these 2 dotted lines. This is usually where the bodies of the candles are closing. The DR range is going to be the tops of the wicks of the candles that did not close out of that range. So once we get a candle closure on the 5-minute time frame outside of the DR range, it is 80% likely that it will continue in that direction. Again, the IDR ranges between the dotted lines, the DR range between the solid lines. Once we had a breakout, we are likely to continue in the out direction. In the settings of the DR IDR, there is an extend Tuesday New York line. If we click that option, you will see that this is the Tuesday New York session. Essentially, if we drew a box around this and kept extending it out, we would see price trading above this pull back into it and then continue in the expansion range. This is a very interesting tool, especially when you're swing trading, because price usually likes to respect or reject this line or this range. For example, this was the previous Tuesday. Price was using it as resistance, broke through, and then used it as support and had crazy momentum to the upside. So if you're into swing trading, consider using the extended Tuesday line. Now you might be looking at this chart and thinking to yourself, well, it doesn't just continue in the direction all day. Yes, that's true. But the strategy to trade this is a short-term scalp. You're just looking for a small piece of the pie that breaks out of this range using the Fractal Frenzy indicator. So taking it back to this first example where I was showing you the IDR and DR levels, what we're waiting for is a breakout on the 5-minute time frame and a candle closure on the 5-minute time frame outside of the DR IDR range. Once we get that, we then switch to the 1-minute time frame and we mark up a few levels as areas of interest for our trade entry. You would mark up the range between the DR and IDR in the area where price broke out. Next, if you have any fair value gaps of the move that forced the breakout of this range, a fair value gap is a series of 3 candles like we see right here, where the body of this one and the 2 wicks of these candles leave a space in between. So it would be essentially this area. Zooming in a little bit closer, you can see that the wick of this candle and the wick of this candle left a gap. So there was a little bit of imbalanced price right here. There was only selling pressure, no buying pressure. Let's change that color to yellow. And the last and final range is going to be from the opening price to the 50% level. So once we've had the breakout confirmation and we've pulled it down to the 1 minute time frame, we're looking for a pullback into our first area of interest, or our second area of interest, or our third area of interest, followed by a fractal frenzy signal. So now that we've had a pullback into our areas of interest, this is where adjusting the settings comes in handy. Some people do stare sensitivity of 5. Some people do a higher stare sensitivity. For this example, I'm going to keep it at 5. And now we just wait for a signal on the 1 minute time frame, rejecting one of these 3 areas. We have our signal right here. You want your stop loss to be above your areas of interest. For this example, it's only 4.5 pips. So let's bump it up a little bit to cover spreads. And you want a 1 to 1.5 risk to reward ratio. As you can see, price came up to retest the DR IDR level again, and then continued down. And you can do this for each session, whether you're trading Tokyo session, London session, or New York session. Now here are the 4 steps to this strategy. You wait for a breakout confirmation, like we had here on the 5-minute chart, a pullback into the DR IDR area to one of your 3 areas of interest. Then you move to the 1 minute chart. And lastly, you wait for a signal towards the confirmed breakout of the DR IDR range. So we had our confirmed breakout here. We waited for a pullback into the DR IDR area. We got our signal right here, and we went for a 1 to 1.5 risk to reward.